Hi traders, welcome to the first broadcast of 2010, brought to you by Greenlight Investments. My name is Sundar and I'll be going through the FTSE 100, the Dow Jones and the S&P 500 just to see where the market might be heading over the next few months. The chart in front of you is the weekly chart of the FTSE 100 going back to 1994. As you can see, the market headed up from a level of around 3,000 all the way up to 6,750 or around that region back in 2000, and then the market started making its way back down, making lower lows and lower highs until it reached a level of around 3,500 in 2003. Following that, the market found support there and headed back up towards the 6,750 level back in 2007. As you can see, the market is actually inside a range almost between 3,500 to 6,750. If we go to the here and now, well, back to 2007 as it were, when the market started making its way down, as you can see, it actually created a double top formation around here, which is I think around the July time and around the October time here. Now, as the market headed down, it made lower lows and lower highs. We can see this in much greater detail if we actually go to the daily chart, because we're looking at the weekly chart now. Daily chart means that we have a lot more candles, so we get more detail as to what the market was doing. If I move this text out the way, there, and zoom in, what I've put here is the main swing, which is the downswing, which I actually drew from the weekly chart. However, I brought it into the daily chart here. The downswing is at 63.77 through to 36. I think it's 36.65. Let's have a look. 36.65. And let's go back again. Now, when you have a downswing, what that simply means is that you also have a down move followed by an up move, which is actually the retracement of the down move before the market can start heading down. So after the actual retracement, which might be to the 50 level or the 618 or the 786 level, the market will start making its way back down again. But if we go to the here and now, going back from March 2009 all the way to the current time, we can see the market has been making higher highs and higher lows. The current swing that we have for this market, for the FTSE 100, is at 40.96 to 51.89. What's important to note here is that the market has retraced to much less than the 38% level. And what this simply means is when the market hits the 1.27 level or the 118 level, is more likely to retrace back inside this this swing, this AV swing, and is more likely to find a deeper retracement, which means that it can come to, say, the 4,772, which is 38.2, or say the 50%, or even the 618, which will be around the 4,500 level. Saying that, the bulls seem to be clearly in charge currently, and you know, as always, go with the trend. Now, the first target for the bulls is at the 5,600 level, and then if they were to continue, they're more likely to find natural level of resistance around the 1.618 extension, which is around the 58.67 area. It's important to keep a track of the FTSE 100, as majority of volume and the larger stocks are all in the FTSE 100. If the FTSE starts heading down, it's probably a good indicator as to what most of the stocks will be doing within the FTSE 100. Moving on from the FTSE, we are looking at the Dow Jones Industrial Average. It's a weekly chart going back to 1995. As you can see, the market was making higher highs and higher lows. Then we had the millennium, year 2000, the stock market crash, as it were, and we had a pullback here where the market went from around 12,000 right down to around the 7,500 level. And in 2003 the market found a level of support and started making higher highs and higher lows until the summer of 2007, where the market started reversing and they formed a head and shoulder pattern, and the market started making lower lows and lower highs until the market hit a level of support again in March 2009. The current AB swing on the weekly chart is at 13,136 for the A and 7,449 for the B. The market on a weekly chart is actually retracing to find a deeper level of retracement, and it's currently at the 50%, but is more likely to be heading towards the 618 retracement level, and possibly even a deeper retracement of the 786, which is around the 12,000 level. If we go to the daily chart and zoom into the here and now, as it were, let's have a look. As you can see here, in March the market basically found a level of support at the 118 extension level, which is a natural level. As you can see, this is the downswing, down AB swing. The market generally, when it doesn't retrace deep enough, normally comes down, goes to the 118 or the 1.27, then goes back inside the AB swing. If we zoom in, right, our current AB swing is at 8,087 to 9,918. This is an upswing. As you can see, the market has been making higher highs and higher lows, and the bulls have clearly been in charge since March of 2009. What's important to point out here is that once again the market is at the 1.27 level, but it's important to note here that at this 1.27 level, which we are at right now, it's also a previous level of support which is acting as a slight resistance. However, I think the bulls are still in charge, and are definitely heading towards the 11,100 area. This is a very important area because you have past level of support, which is more likely to become resistance. You're also having the extension, the Fibonacci extension level, which is at the 1.61, which is 11,134. And also, to find more confluence here, we also have, this coincides also with the 618 retracement level of the large downswing. So an area to look out for is 11,000 area on the Dow Jones, as there's significant level of resistance around that area. So the market at that level may be in need of pullback, or probably is going to have a much deeper retracement than before.